Let's talk about corporate tax rates. Pretty boring, right? Well, not boring when you consider the impact that it can have on the job market. More millennials are suffering through unemployment than ever before, and it's very important to be aware of this issue before millennials get out of college and don't have jobs. So, how do we get there? One idea is lowering the corporate tax rate. The corporate tax rate in America is 35%, amongst the highest in the world. In comparison, other countries have around a 15 to 20% tax rate, which encourages smaller businesses to take advantage of it and to grow economically. These sky-high tax rates are driving away companies. This can lead to corporate inversion, which is companies in America taking advantage of lower tax rates overseas. This means bad news for millennials getting out of college as they can't find jobs immediately because of the job outsourcing that is caused by companies leaving America. Companies are also moving profits overseas in order to dodge taxes. Funny enough, this means that companies in America that are subjected to the 35% tax break aren't really paying 35%. In fact, they're paying around 15 to 20%. Some suggest that if we lowered our corporate tax rate to 20%, the government would actually collect more revenue than it does now, as companies would keep operations domestic. There's a new tax plan that's being proposed in Washington currently. Though the details aren't all ironed out, the idea is to lower the corporate tax rate to around 15 to 25% in order to keep jobs in America. The aim is to lower taxes across the board, including corporate tax, and make sure that small businesses have an equal opportunity as large businesses to pay the same rate of taxes. Large companies usually have armies of lawyers and accountants to afford to bypass the 35% tax rate, whereas smaller companies don't have the same budget and are subjected to higher tax rates. Tax rate cuts have to come with equally large cuts in spending in order to not fall into the slippery slope of a deficit. By lowering the corporate tax rate and the top rates on ordinary funds, capital gains, and dividends, the economy grows. What does this mean for millennials in 2017? More millennials are starting their own businesses than ever before, and with the advent of social media, it's only becoming easier. Tax reform indicates not only reductions in income tax rates, but also base broadening strategies, including tax expenditures, which narrows the base. If not combined with moderate marginal rate cuts, base broadening strategies can have a detrimental effect on the economy. This means bad news for millennials who are seeking jobs. For Gen FKD, I'm Terzel Ron, signing out.